Hi guys, welcome to another video. So today is Friday. So before the stock market opens in the morning, so we can talk about the stock market, because last night stock market stumbled a lot because of the terrorist attack. It happened in Spain, which happened to ISIS. They are doing that. They admitted that they are launching this attack yesterday. So as you can see, the VIX, which is the terror index, has been hitting challenging highest in the last year. So people are quite panicked. The last time we seen that is last week. So that was because of the North Korean issues. Okay, so with these two issues, we're really much saying that the stock market will crash. So right now we'll check about what we have talked about in the previous video. So first of all, of course, the VIX index. The VIX index is pretty bad. But the second thing is how the market is reacting to the news. So we have to look at the US 10-year bond yield. Okay, so right now the yield is 2.1974. So it's this really bad. Is pretty much worse than before. As you can see, the trend is going down, and the gap between this and the Fed rate is really the big component in the leading index. Okay, so in fact the gap is become narrower and narrower. So the profit margins and the activities in the world, especially in banking and insurance, will be doing a little bit worse than before. But as you can see, ever since Donald Trump was elected to be a United States president, the yield had gone up a lot. So right now we are staying at around this level, between 2.1 to 2.5. So right now, as long as this level is not is high enough and the future yield is not going below 2.1, let's say, then we can say that in general in 2017 the confidence of the market is still higher than 2016. Of course, you would say that the stock market has gone up a lot, right? So that means that the stock market will adjust. Not necessary, because it is somehow correlated with the bond yield, but it's not exactly related to the bond yield, because the bond yield, what the bond yield needs to do is to stay as high as possible, and the economy will grow exponentially. So this is what we're looking for. And the second signal we have to look at is tonight. That is the Michigan consumer sentiment, and we have to look at the forecast, not the previous data. So the forecast is 94. So you can also check the Michigan consumer expectations, which is always, if you're not familiar with this index, usually is lower than the sentiment. But that doesn't mean that the consumer confidence is going low. But this is, again, this combined with the gap between the 10-year bond and 10-year yield, and then the gap between the 10-year yield and the Fed rate is another signal. Together, these two data is already around 30% of the leading index. So just these two signals will be coming out tonight. Okay, so we really have to look at this signal to see that the market is going to crash. But first of all, our first choice is the market is not going to crash. At least we cannot see this signal from today. Of course, next week, next Monday or Tuesday, if anything happens, who knows? But that is something that will happen in the future. But as long as what we have and the evidence and the proof and data right now is saying that the market was going to adjust, whether short term or long term, is saying that it's going to be a short to long to mid term adjustment. More or less, it will be adjusting using time, which means it will adjust, but it will like going up and down, and then using time as its adjustment. What does it mean? We're adjusting using price, which means it's going to crash. Okay, using price, sharp cut going down, that is another adjustment. So right now, by seeing the bond VIX is really bad. Okay, it's getting bad, but getting worse. But the seeing that the 10-year yield and also the sentiment, and also technically is going to our first choice is going to be going up and down, but within this range of 6,200 to 6,500. Okay, so this is our first choice. So if that is true, that is something, there's a chance for us to sell the bad stocks and hold the cash and exchange it to another good stocks. For example, some good stocks is the stock price is coming down. For example, Amazon, Google, they're really good stocks. And for example, in November 11th, if you haven't heard about it, it's another festival for Chinese to buy things online, and 80% of the sales come from Alibaba. Okay, so Alibaba is not adjusting at all. It's hitting historic high again and again and again. This is another stock you can think about. And also Nvidia. So this is biggest supplier of all the chips, and also PlayStation, gaming console, stuff like that. So it is adjusting a little bit after the earnings report comes out. Of course, you can look at my previous video of how do we calculate valuation, right? So, but this is again three candlestick pattern is pretty bad. Three bearish candlestick patterns. So as long as it can hold this bottom of this candlestick, which is 152.91, is something that is good for us to buy. As long as, remember, as long as the Nasdaq is coming back up from this purple channel, there is not single possibility that we should buy and invest in anything if tonight the Nasdaq is going down below and close below within the purple channel. That is pretty bad signal, and the target will be, let's say, 6,050 to 6,100. Okay, so that's basically my update with you guys. And if you have any questions, please leave your questions in the comment box below. And also, please subscribe to my channel and also like my Facebook page. The most direct way to support me is to like and share this video. I will see you next time. Investing made easy. Goodbye.